Good morning. Already mid-August. We're pretty sure, at least at this point, what kind of a crop yield we're going to have. We're going to have an above average crop, and the markets reflect it. December corn down a penny, but look at the November soybeans, up 55 cents this week because USDA basically shuffled 2.5 million acres out of soybeans and into corn. However, the corn ending stocks are so bad, they just decided to reduce the corn to 2.1 million. Somehow we lost 400,000 acres. Typical USDA, they to shuffle 2.5% of corn and soybean acreage around this late in the crop year is astounding incompetence, to say the least, basically. But they did it, and so the market reacted. Quite honestly, corn should have been down 40 cents, soybeans up 75 on that type of news. But you know, the market is a process, and this is how far we're in that process so far. September Chicago wheat down 8 cents for the week, as was Minneapolis. The wheat market did not follow. It kind of follows corn more so, but actually a 1 cent loss in corn with a 2.5 million increase in acreage at this late date and a 7.8 bushel increase in the yield projection is astounding, to say the least. So it looks like the trade doesn't believe almost anything USDA says at this point. But, you know, we did have early planting in the United States this year. Corn price set in February for insurance was higher, you know, relatively speaking, much more profitable than the soybean price. So those acres probably were attracted. It's just astounding that USDA so incompetently missed that until the FSA acreage. There was no update by NASS on the survey of acreage. The only way they could have made those kinds of astoundingly large changes this late in the year had to have been from FSA planted acreage data. September feeder cattle up $7 basically for the week, proving that that probably was no top a week ago when we were limit down, and basically settling about at the recent all-time 6,000 year high. October crude down $1.02. Russia US had a summit yesterday in Alaska. Putin and Trump want to make peace. Basically, they said there's one major, very minor issues, other than one major issue, and of course that is the little troll Zelensky, who doesn't want peace. He has devastated his country, killed about 1 million Ukrainians, and lost 2 more provinces by fighting for 2 years. What's the point? At this point in the battlefield, Russia is taking land at an increasing rate. He is a fool not to want to come to some peace terms, but the little troll is obviously manipulated by probably the deep state in the United States who installed him there. And actually, there's a reason that Zelensky, the Ukraine leader, is not at the Ukraine-Russia peace talks in Alaska. It's because Zelensky was always a puppet leader. The United States was behind this war, fighting Russia through Ukraine, and Biden implemented it with Obama over a period of 15 or 20 years. And obviously, the fact that Zelensky isn't even there is obvious admission that Biden started this war on purpose. And the deep state, of course, really did it because Biden was just reading the teleprompter. So what an interesting situation there. October crude down $1.02 because of that. Likely the U.S. Russia resuming trade relations, and even with Europe, Russia really is the cheapest source of energy for Europe. It's cost them a ton of money besides the direct money they've spent in Ukraine. The United States taxpayers sent $350 billion there, and what did we get out of it? We lost 2 provinces. But Mr. Zelensky, rumored to have taken $50 million, him and his aides and people around him, every month to United Arab Emirates into their personal bank accounts. So that's the result of that whole situation. December gold down $109. Pretty big losses in December gold. The market is making moves. Most of those moves are not in the grains other than the November soybeans this week. Weekly crop progress actually continues to show an improving crop in the United States, both corn and soybeans at the highest yield potential of the year. Corn conditions down 1%, as were soybeans, still well above last year. Soybeans equal to last year. Our yield model is 53.03, up 0.23, and the highest yield potential of the year, above trend by a bushel, but not as high as USDA. Why did USDA jump soybean yields 1.1 bushel when they didn't need to? Because they did need to when they subtracted 2.5 million acres from it to show any kind of carryout above 200 million bushel. And that's a stretch, to say the least. But they're going to end up lowering this yield number. That's the highest yield number you'll see for soybeans. Now, soybeans can improve the last 3-4 weeks of this growing season, as they have been, this past week. But I don't know if they'll get up to 53.6. Maybe USDA will be bailed out. That crop is not there right now. Corn, however, different. Our yield model, 191.09, highest of the year, up a bushel this past week. USDA raised their yield 7.8 bushels in August on Tuesday of this week to 188.8. They're still low, about 2.2 bushels, and that yield could also climb throughout the year. Big crops do get bigger, so maybe soybeans will end up to USDA's ridiculously high August number, but I don't know. We'll wait and see about that. Hybrid spring wheat conditions improved 1%, 72% last year, obviously well below. There are some very good yields, 90 bushel plus reported in spring wheat country, but there also are 25 bushel yields. Spring wheat is not good, probably down 10% in yield potential from last year. Topsoil moisture still pretty good, but we are dropping, especially in the southern part of the U.S., because that has not received a lot of rain in the last 2 weeks versus last year. We're still above that. And of course, the reason the market doesn't care much about that is we're into mid-August. We only got a few weeks left, and we look at the weather forecast, that's not threatening. I already talked about a bit of the USDA shockingly ridiculous admittance of their incompetence in moving 2.5 million acres out of soybeans and moving 2.1 of them into corn. The corn yield hiked and the soybean yield hiked. This soybean yield's too high, this corn yield's too low, but these acres obviously made a big impact on the market. Ending stocks, corn up 457 to 2117. Actually, the production was up 1.2 billion bushels or something like that. 2.1 million acres at 190 bushel an acre is about 390 million bushels there. 7.8 bushel on 90 billion acres. If you had 7 bushel on 90, that's 630. I mean, you're over a billion extra production. There is no way we're only going to increase ending stocks 457 unless prices drop dramatically. Soybeans, a 20 million bushel reduction. Well, you lost 2.5 million acres times 53 bushel. That's like 130 million. And they offset it some with the yield increase, but the 20 million bushel decline, soybean prices would have to go up a lot to keep our demand. So we still have a 290 million bushel carry on. Wheat down 21. Wheat consistently bullish across the U.S. and world ending stocks. Yet wheat prices are the only thing that seem to consistently move lower this past week. Corn ending stocks up. This is basically a U.S. change number, and soybeans as well. Basically, the stocks and the yield changes. So look at what the market responded. Corn ended up only a penny lower for the week. We are at the top of that downtrend. So corn prices really probably need to continue to go down. You can see the downtrend is still in place. And actually right now, if you need to sell corn before harvest, this might be about as good as chances you're going to get. However, a thaw in U.S.-Russia relations will make it possible for the U.S. to make a trade deal with China and India, who we are sanctioning, tariffing, because they're buying Russian oil. Quite frankly, we will have better demand for this grain eventually. It's just that corn yields are still growing, and we still have to digest that 2.1 million acre increase. Soybeans, though, popping higher. Actually, a different looking chart. Look at the lows here, separated by 3 or 4 months. We have an uptrend, actually, sideways to uptrend developing. Soybeans are probably not going to go lower at harvest, particularly if USDA has to reduce that yield into January. Soybeans could have a very nice bull market starting this year, and these bull markets could last 2 or 3 years. This is not the time to sell soybeans. And even if you sell corn against this upward trend line, you will have to buy that back at harvest time. And whether or not corn bottoms, the corn could even bottom here, unless the crop continues to improve. Here's our weekly rain forecast for this coming week. Pretty good here in Minnesota and Wisconsin. Actually, these 3 states are getting too wet, as are the Dakotas. And we would like less rain because we're going to get too wet and have problems harvesting. But this southern part is where the soil moisture is declining because it hasn't rained much there the last few weeks. You could actually see some trimming in the yield potential there. We still have some heat forecast here in the south in week 2. This is the 8 to 14 day forecast. But this cooler temperatures could become a problem for northern areas, especially where it's too wet and crops have been delayed. We planted it early, but we're at normal progress or so. Now we get cool weather and have a potential to freeze that at the end of August. Wow, that could actually hurt the crops. So this cool weather forecast here in the north is not necessarily bullish. Or not necessarily bearish. I think that could become a problem if we're below normal temperatures and we freeze this crop early. It's just astounding considering how early this crop was planted. The forecast for precip, though, in the week 2, you've got near normal and above normal. This is not a threatening weather forecast, and of course, that's why the market is remaining soft. Here's a wheat contract, new lows in Chicago wheat this week. Not sure that's justified, other than the horrible corn fundamentals. But ironically, wheat went down more than corn, even though the wheat fundamentals were improved in this August USDA report. Boy, you got to look at wheat and wonder, when should we buy wheat? And I would say we're getting very close to that point. Spring wheat harvest is moving along. We'll probably be 50% harvested next week. And the next week or two, probably be a great time to buy spring wheat. And soybeans as well has probably the most bullish fundamentals. We talked about that, probably since April this year. But the problem was the crop kept getting better. Yields are going to be above trend in corn and soybeans, and they struggled. But that is not the case in spring wheat. So it's interesting that spring wheat made new lows on Friday. Feeder cattle, many people looked at that limit down move Friday over a week ago, said, wow, cattle might be topping. Boy, we rallied right back to a new weekly high close. The uptrend is still intact in cattle. Clearly, uptrend is still intact in cattle. And this crude oil showing some weakness, bouncing to new recent lows. You got a lower high and a lower low. We're probably starting a downtrend in crude oil. However, you're down at the low end of this range. If you need to buy energy needs in the short term, might not be a bad time to buy that against this downtrend line. But overall, it looks like crude is headed lower. And why not? If the obviously U.S.-Russia relations have thawed, the deep state thugs that started the Russian war, we started a war with Russia, a capitalist country who's been a democratic country for the last 30 years and a capitalist country for the last 30 years. If you wanted to start a war, the Chinese are a communist country. There's lots of socialist countries out there. The only problem is most of them are in Europe now. And actually, there's a lot of socialists in the United States. Bernie Sanders was the chairman of the Appropriation Committee during the Biden administration. And, we probably have our socialist problem in the United States. It's not, our enemy may not be abroad. It may be in the United States. It may be the man in the mirror, basically. So you got to keep that in mind. Gold has been petering, of course, down $100 this week, but we really have a trading range here between 3,300 and basically 3,550, and gold is trading back and forth in that range. When is it going to break out of that channel? Generally speaking, a consolidation period is not a top. Usually a consolidation period is a consolidation, and usually that breaks out, continuing the trend that is in place. So there you have potential there for the gold market to continue in the bull market that it has been in. So sum it up, a lot happening this week. USDA admitting a huge blunder in acreage of corn and soybeans, making soybeans very bullish. And the only problem is soybean yield potential has been growing week by week, and getting above average. It's going to be above average crop. What will we do the last 3 or 4 weeks? Usually big crops get bigger unless we get a freeze or some other major problem. That's about all that's left, because even the depleted soil moisture in the central and south, you're at the end of the growing season. Corn is pretty much made there. So hard to dispute. Corn, much more bearish, way more acres, and a bigger yield. And the yield is probably going to have to go higher because our yield indicators indicate corn is better than 188 bushel, more like 191. And world affairs, Russia-US relations thawing, world peace coming to Ukraine and Russia. Usually world prosperity follows world peace. Many wars are being averted all over the world. And of course, many want to nominate Trump for the Nobel Peace Prize. It's a very liberal peace prize awarded by the Norwegians, basically, and who are also very liberal. Very unlikely he'll ever win anything, but wow, he has caused peace to break out in many areas. If it breaks out in Ukraine, where the biggest war is being waged, 1 million lives lost last 2 years, it's very likely that prosperity and trade will follow in the world. And of course, that's good for agriculture because we export a lot of grain, half of our wheat, 1/6 of our corn, 1/3, maybe 40% or more of our soybeans. So there's some positives out on the horizon. I would think soybeans will be the most positive market over the next 6 months now. We just have to determine whether yields continue to go up or they're trimmed or they remain the same through the year. And corn, the least bullish because of these extra acres, but wheat obviously has some potential to go higher as well. And how about those cattle? New highs over and over and over again. Every time you think the market is topped, it just goes higher, even higher. Hope you have a great weekend and good marketing.